What's going on, guys? Welcome back for another episode here on Let It Grow Investing. I'm Jeff. We're going to get into everything market related, stock markets, investing, finance, crypto, whatever we can get our hands on. We're going to try to cover it. So thank you guys for being here. And yeah, please make sure you like, subscribe, share. It definitely does help the podcast. And I would definitely appreciate that. So first up, man, I think first thing we need to cover is probably NVIDIA. I mean, that was the big news from this week or since the last time we spoke. And a lot of different things going on with NVIDIA, their earnings, and just what we're seeing from them. And, where they went after earnings, where I think they can go, and what's kind of holding them back. I think that's kind of top of mind for a lot of people, as a lot of other stocks, AMD, SanDisk, a lot of these other names have already run. So let's dive in. I got a little bit of research pulled up here. Let's go ahead and share. And, right when you get good at something, they always change the layout. I'm looking at Facebook or Meta on this as well, and they did the same exact thing with everyone's toolbar. It went to the bottom of the screen, and we don't know what to do anymore. That's how I feel recording right now. So here we go. We got, this is just a quick Gemini overview. Q1 27. I know that feels really weird saying it like that, but it is Q1 27 for NVIDIA, although we're in, fiscal Q2 of 26. So we've got an 85% year over year increase on revenue, $81.62 billion with a B. And that is just in one quarter. So we're looking at a massive growth in revenue. We're looking at massive future guidance. We're looking at, I think they said Q2 was going to be like $90 billion. I know that was in here somewhere. I looked at it last week, and that's what I was looking at, right? So we've got total revenue $81.62 billion, consensus of $78.86 billion, adjusted EPS of $1.87 per share. Why can I not highlight where I'm going? Yeah, there we go. Topping Wall Street forecast of $1.76. Data center, $75.2 billion, 92% year over year increase. Explosive sustained global demand for AI infrastructure. So they're saying the right things. They had a double beat, and the stock gaps down. There's a lot of different thoughts here, right? There's a lot of different reasons as to why I think that it didn't go exactly where we thought it should. Maybe people were looking for a little bit more. Maybe people think that NVIDIA has just already run so much and it's the number one stock by market cap. The fact that it's $5.2 or $5.3 trillion of market cap, how much more do we want to send this thing higher, right? I think that has a lot to do with the size of it. But then we've also got a lot of fear as to who could potentially be eating their lunch, right? So that's another thing here. So I'm looking at this. We're looking at a market cap of $5.2 trillion, right? The trailing 12 months PE is a 33. I believe futures like a 28. I could pull that up. You can pull that up. I mean, we can definitely take a look into that if you need me to show you, but I'm sure by now you guys know just what I'm looking at. So we still have 41% of upside. I do see this, and I do get a little fearful at just what's going on out there, right? So the frenemy threat, it's real, right? Alphabet, yeah, we use your stuff, but yes, we're going to invest heavily in our own stuff. AWS, yep, they're developing Trainium and Inferentia chips, which are increasingly marketed towards AWS customers at a better price to performance ratio for specific workloads. Microsoft and Meta, they're scaling their MAIA chips. I'm sure someone has a pronunciation on that. I don't know it, so I'm not even going to try. Major startups like Anthropic exploring renting Maya powered server. I just said I wasn't going to try, and now I'm reading it like I know. While Meta heavily utilizes its custom MTIA silicon for internal inference and recommendation algorithms, right? So there's a lot of different fear out there that some of these other massive players are getting into the space. And what happens if we do send this thing 40% higher and say it's a $7 trillion market cap at that point. Yeah, 7 trillion. I think that's what I said. $7 trillion company. And then these other massive players start eroding that market share that NVIDIA has built. That is a huge question mark as to whether or not there's enough to go around for all these big players to get into space. And then, couple that with Huawei and China kind of taking over everything there. Jensen Huang said, yeah, they're doing great. Yes, we might get some, I think it was the H200 chips into China. I think that kind of came out of Trump's visit over there. I'm not sure, right? So there's a lot of different fears out there that, yes, things are going really, really well for them, but when does the party stop? That, I think, is the main question on everyone's mind when it comes to NVIDIA. So yes, AMD is a much smaller company, but when we look at that, we also see opportunity as to, well, where can AMD take market share from NVIDIA? Where can they become the next big gainer, or maybe not big gainer, but the next big market share competitor? And they're getting there. Yes, they've had this massive run. We're looking at this, right? It's 467. I'll touch on that in a second. But where is the market cap of AMD compared to that of NVIDIA, right? They're looking at $762 billion. And that's after probably a 3 to 4x run that got us to $467 per share. So we're looking at a company that is not quite 20% of the size of NVIDIA when we're looking at AMD, right? NVIDIA's got that $5 trillion market cap, and AMD's not at 1 trillion yet. Are they going to get to 1 trillion? Yeah, I think that writing's on the wall. I don't see it not getting there. But at what point does NVIDIA start to pull back in market share with players like AMD, Google, Meta, Amazon, Microsoft, all trying to, kind of chip away at what they're doing and kind of making their own chips cheaper for their own processing plants, for their own data centers, for whatever they're doing? They're trying to come out with their own cheaper solution to the problem. And there's enough, business out there that Amazon can certainly sell their own chips. Microsoft or Meta can sell their own chips, and they're going to do it, and they're going to have more competition in this space. So I think that's really the fear. And if things go the same way that they've been going, yeah, we can look at it and say, yeah, I mean, NVIDIA's they're increasing their revenue. They're increasing the amount of earnings they have. They're increasing the amount of things that they're producing. The product lineup is great, but when does that stop? I feel like that's the real, roadblock or hurdle that they've got to get over. Oh, hi, puppy. And we've got a lot to figure out when it comes to just where NVIDIA goes from here, right? So we had good earnings. We had good revenue. We have good guidance. We're in the right space. So there's all these things that have been tailwinds for a lot of companies now pushing as a headwind, it almost feels like, for NVIDIA, because everyone is trying to get into the same space, it feels like. So that is some concerns there for NVIDIA. I do see it as a great long-term play, but I think that is the fear right now. That's why I don't see, after a great earnings, we've got 41% of upside on a $5 trillion company. And I mean, you can do the math, take the share count, multiply it by where it would be at $304 per share, and you can figure out the market cap of what it could potentially be if it has a 41% run up from here, or just take the market cap and add on 41%, just be that simple. So those are the fears that I have around NVIDIA. I still added some this week. I still think that is a great company. And but it's got more fears than we did previously. But we've seen NVIDIA have more fears previously when we were getting out of some of the crypto mining space, when AI was not the talk of the town. They said, if the price on Bitcoin goes down, the miners don't make as much, they don't buy as much product because no one has the desire to mine if Bitcoin has that big drop, right? We've seen that before. We've seen it play out from different things on the kind of return to work, and people weren't buying as many home computers. People weren't buying as many gaming PCs. because they had to get back to life, right? It's crazy to believe that that was 6 years ago, but we've kind of gotten over some of those hurdles. And we've seen NVIDIA kind of chip away at it going forward. They were always at the brink of the next big thing. And I tend to think that they're going to do that again. I don't know what that next big thing is, but they tend to be there before everyone else gets there because they have some of the best product in the world. That's why they're a $5 trillion company, right? It's that simple. They are where they need to be when they are, things are kind of rolling out the next big platform. So yeah, AMD. We've talked about this one. I told you guys 2 weeks ago that I sold way more of it than I even thought I wanted to. I sold 200 shares at $450 for about a $90,000. I'll say payday. It really wasn't. It brought in a lot of cash, and I had to figure out how much I need to put and where. On E-Trade, you guys can see that I'm on E-Trade right now. I opened up a high yield savings account and put 30 grand of that into a high yield savings account, earning about 4% annually. When that tax bill does hit, and I know it's going to, I have that 30 grand set aside, gaining a little bit, right? Could I do more elsewhere? Yes, I could. But the thought here is that if I put it into another stock, and then I have to sell it at the end of the year, I'm going to get hit with more short-term capital gains, and I don't want that. So I threw it into this high yield savings account. And that's not to say that I won't get taxed on some of those interest or whatever, but I know it's going to be there. I don't have the volatility that I could potentially have from throwing it into a 5 or 6% stock that could fluctuate in value, right? I could throw it in Realty. That was a thought. That could be potentially something that we could do. Throw it here, and then I'm getting, potentially 6% yield. This is 5.25 right now. But what happens if this principal goes down, or what happens if the stock price goes down to say $50, right? Then I got to sell it. I wouldn't necessarily have the tax bill, but I wouldn't maybe have that 30 grand that I was kind of relying on. So having it just simply tied up into a high yield savings account gives me a little bit more flexibility, gives me that peace of mind. And right now, that's what I wanted. I didn't want more problems. I didn't want more homework. So I simply tucked it into the savings account and kept it right in the E-Trade Morgan Stanley portfolio. And if I needed, I can just kind of move it back from one to the other and say I sell off some other stuff and I write off some other losses. And I don't need that amount of cash. I can simply just move that back into my portfolio and kind of keep on investing. So that's some thoughts of what I've got going on there. This past week for the investing challenge, I did buy Salesforce. I think the software space has still just been kind of weighed down, right? I tend to take a look at all the different things that are out there. If you're new here, and for some reason we had a massive spike in views on the video last week, so thank you guys. I'm not too sure where it comes from. I don't know why it happens. It's happened in years past with different episodes on Spotify as well. But, it had this weird spike in how many people saw it. So thanks. But if you are new here, I do have a list, right? And it's real technical, right? It's my little Post-it note here of what I've been looking at since January 1st of this year. So for the investing challenge, we look at 12 stocks, or this one is actually 13, including Bitcoin. And we try to find the best one to buy at any given point throughout the year to average into some stocks that we really like, that we really have high conviction in, knowing that we want to be in these names for the test of time, right? I look at these as long-term holds. That's really what I'm doing here with the Investing Challenge portfolio. We're up pretty significantly. I'll try to pull that up here in a second. But the names for the year are Nike, SoFi, Salesforce, Adobe, AMD, NVIDIA, Microsoft, Amazon, Celsius, GE Vernova. I was trying to look at something that had more energy tied into it, Netflix, and Bitcoin. So I did pick Salesforce. Ticker is CRM. You're looking at it here. And why? Right. Well, I started to see this thing bottoming. It almost seems like it wants to kind of get out of its way, or at least start to move higher from here. Like I saw some of these lows hit back in April at 163. We started moving back up. We were 165. We really have set in this base a couple times, right? We were 164, 165. We didn't break that low. We kind of rolled back up higher, right? So I started to think that this does make sense. There is a lot of fear around software with AI. Salesforce is leaning into the AI system and their AI chatbots. You still have 41% of upside. Yes, you have that with NVIDIA also. I've explained there as to why I still like NVIDIA. I did buy some NVIDIA, but I also want to be into some of these other stocks that I think just are not getting any sort of recognition for what they're doing in the space. Plus, you had Salesforce kind of come out and they kind of sandbag some of their numbers. They say, yes, we could be 7 to 10%, and then they turn in their homework and it's about 15% of gains or whatever it might be, right? So I like that. I still think it's too cheap on PE, on PEG ratio, on a lot of the growth metrics that they have. Now, this is Adobe. That was another one that I really want to take a look at more closely. I do feel like ChatGPT really does hurt a lot of, and AI in general, hurts a lot of Photoshop customers, hurts a lot of creators. There's so many different ways to make graphics and videos and things like that now that I don't know how much that hurts Adobe. So that is definitely something that I am cautious about. This Adobe was $329 to start the year, and the fact that we're at $246 now, it does feel like it's a decent value. I'd have to dig into the numbers, and let's do that. Let's take a look here and see what we can find out on Adobe and see if it's worth investing into now. I generally look at Refinitiv, and that's what we're going to do. It's here. I'm going to look at this Refinitiv report. We're going to share this one. And here we go. It currently is a hold, 5-year return of minus 50%, call it. 1-year return of minus 40%. So most of that loss is in the last year, right? So we're looking at a stock that's come down 40%. It's still in a lot of great spaces, but there's a lot of fear around what could be from AI, how many jobs get taken, how many people don't create with Adobe anymore versus, Claude or Grok or ChatGPT or Gemini or name another one that I don't know. I'm sure there's plenty of them out there that I just don't use. And we're going to see just what's going on here, right? So annual revenue, we're only getting around 9.5% of growth, 19% of growth by the end of next year. That's cumulative. So you can add, another, call it 9.5% on, and you're going to get to around that 19%. So about the same per year, right? It doesn't mean we're adding 19% in 27 alone. It means by the end of 27, from where we're starting, we're going to be 19% up. So, we've got dividend growth, nothing, because they don't pay a dividend, right? Yeah, no dividends. Don't like that. We do have a significant forward PE discount, right? Normally trades at a 26.7 times forward PE. It is trading at a 10. That means that it is one of the cheapest stocks based on forward PE in the index. Now, we kind of want to couple that with the growth that they're going to return, and we're going to see just where it goes. So they are actually putting up decent enough growth numbers that this forward PE divided by your growth rate, the 5-year forecasted growth rate, you can see it here, is going to be a 0.8. That means that this is very, very cheap. And the growth rate is there to basically signify that this could be a strong buy because you're getting it at such a cheap forward PE with a growth rate that is going to exceed basically the forward PE metrics. So I think it could be a solid buy, but you do have those fears. And I think that's why it is trading so cheaply, is because there's fears, right? People want to sell this thing off because AI is coming for Adobe. It's basically like you're in an industry and Amazon enters it and no one wants to even touch that stock anymore because Amazon is coming to eat your lunch. Now AI is coming to eat Adobe's lunch. So that is the fear here. Now, do you want to hold your breath and dive in? That's the tough call. That is the billion dollar question. Do you want to get into this thing when it is so cheap? It's getting hard to ignore. But I mean, we've seen that with PayPal before as well, right? PayPal just never looks good. It never looks like a stock that you want to get into, but it looks so cheap. It just looks like, man, if they could only just turn it around this little bit, and do something here, right? If they could just do one thing. And that is the problem when it comes to some of these stocks that we just don't know what they're going to do. I'm going to pull up PayPal here and get back to what we were looking at. Yeah, I mean, PayPal is at $44. If you zoom out, if we go back to COVID times and you look at where it was at $294, oof, man, if you were buying that there, I got out of this before it went down to 40. I know that. I probably got out in the hundreds. And I still look at this thing like it is so incredibly cheap. Trailing 12 months is an 8.2, but you just don't have any real reason, any real catalyst to buy this thing. I think Adobe has more catalyst than PayPal does. There's so much competition in the payment space. Everyone's trying to do it. Everyone's trying to transfer money quicker, faster, cheaper. And it just almost feels like a race to the bottom. Adobe still has a lot of good products. They're just really worried about the amount of users that they can retain. So if we look at Refinitiv, we're going to see some similar stuff on PayPal's, but I just don't see the catalyst. I mean, that is painful. This is a 82% drop over 5 years, 38% in this year alone. I mean, it's brutal. It's very, very brutal. So if you're in this one, you got to be mindful, right? You've got 10 broker downgrades in the last 120 days. Yes, the price target says you can get about 12% higher, but it is so cheap. And people have said that it's so cheap for so long that I don't see the reason to buy it. So 3.5% revenue growth in 26 and 7.8 in 27. I mean, I'd rather buy any bank, any utility, anything rather than buying PayPal anymore. There was a time when I really liked PayPal and I thought it was going to do great things. So yeah, if you just simply look at a forward PE of an 8.2, it's a 58% discount. That isn't enough, right? That doesn't tell us that it's going to do anything. And now we would have to have a forward growth rate of 8% annually to be at a 1. I'm guessing we're going to be below that because we're looking at forward revenue growth of like 3.5%. No, it says we're about a 1. So we're looking at a forward forecasted growth rate of about 8% to meet that forward peg ratio that we're at that is currently an 8.2. So we're pretty even, but I still don't want it. Like, I just don't want it. Like, there's not enough growth there for me to want to buy PayPal, knowing that the growth rate has to be high single digits on a tech stock that is in a spot where everyone is just trying to eat their lunch. And it just doesn't seem like any place that I want to park money. I'd rather pay more for a utility, for a bank, for something that's going to just kind of churn along, whether it be waste management even. Like, those just feel safer. I'd rather be in Costco. I'd rather be in so many names other than PayPal. That seems like a one-trick pony that doesn't have a trick anymore. I mean, that might be brutal, but that's just how I feel about it. It is a painful stock to be in. It's cheap for a reason, and I don't see it getting out of its own way. So yes, it's a 58% discount. Yes, the peg ratio looks cheap, but why are you buying it? And I can't come up with 3 good reasons to buy this. And if you go back to like episode 8 or something, I said, give me 3 reasons. You need to have 3 reasons as to why you're buying a stock. And this chart shows me nothing that I can say I want to get into this thing. I mean, the dividend's 1.3%. That ain't anything to write home about. And I feel like you can lose more, and 12% of upside is not great. The peg ratio looks good, but why? It's just, oh man, there's like nothing really telling me to go ahead and buy this. I would buy every single stock on this list before I would buy PayPal. Every single one. If you're looking, XYZ, Block. All right, Airbnb, eBay, Intuit, MasterCard, Mercado Libre, Meta, Shopify, Uber, Visa, and Block. I'm taking any one of these. I'm pretty certain, and that's just a blanket statement. Any one of these over PayPal, right? They all do so much more, and they have much better numbers. I can't see a reason to buy PayPal anymore. So that's where I'm at on that one. Where do we want to go looking forward for the investing challenge? Well, I just basically told you it ain't going to be PayPal. I'm done with that one. I can't endorse anyone buying it. But there are a lot of stocks here that do make sense that have not traded that well. First one that's going to catch my eye is Netflix. Where are we on Netflix right now? It's 88. We started the year at 91. We had some earnings problems. This thing got traded down. We were at probably 105-ish. This is probably maybe longer ago than that. Yeah, we were 107. This was April 15th, tax day. We were at 107, right? And then we kind of got the earnings. We came down, but it wasn't that bad of an earnings. I still like this stock. I would imagine that we do have some upside. Yes, they spend a lot on production. 30% of upside. That feels pretty decent. If I were looking to buy this thing long term, I think we did get down into the 70s. I was just looking at it. You'd think I would have paid attention, but I didn't. Yeah, we were at 75 in February. And yeah, I might want it to go down a little bit lower, but I do think that this could be a good stock long term. Nike, man, I still feel strongly about Nike. I know that everyone says that everyone's coming for them too, but I don't know that a Lululemon, a Brooks, a Hoka is going to be that brand that Nike is. I don't think that Brooks or Hoka is getting into any real sports kind of thing. Yes, running, yes, walking, but I don't see that the next big NFL stars wearing Hoka shoes in their game. I don't see the next big NBA stars wearing Brooks in a game. I just don't see it. So I still think there is that cult power, that culture, pop culture that is going to say Nikes, Jordans, and things like that are going to have staying power. They might have gone out of flavor for a while, but I don't see that being a long-term detriment to the company. So I still really like Nike. I think that it is super cheap here. I think Nike and PayPal at roughly the same price. For me, it's Nike is a no-brainer at all comparing the two. I mean, I didn't even have to make that announcement. You guys probably already knew that one. But sorry, am I not sharing this? Sorry, guys. I think I closed out of it, and now I'm not sharing it. That is my fault. Let's go back ahead and share the screen on E-Trade. Sorry, I closed out of the one and it went away. So yeah, Nike's $44. We got 34% of upside. I'd much rather be here than a PayPal. I'd much rather be in Netflix than PayPal. Now, SoFi, man, I really, really love SoFi. Anytime this thing is under $17, I want to buy it. I've been adding, I think I added another couple hundred shares with some of that AMD money. Some of that money went over into SoFi because I like diversity. I like having a bank rather than just being so heavy in tech. It is a fintech, I will say that, but I do really like SoFi. All of these stocks have got around 30% of upside. Now, AMD does not. NVIDIA does. We saw that one. Salesforce, I forget what the exact number was there. And that doesn't really mean all that much. We got to dig in further. 41.5% of upside there. We looked at Adobe. I don't know that I want to be there right now. Microsoft to start the year was at 473. We're down at 418. We have 33% of upside there. Amazon. We looked at the year to start at 227. We're at 266. I still really like this name. You got ties to Anthropic. That is the same with Google. Let's share this one instead. Anthropic, I believe we're going to be going public as well. So Amazon and Google are big investors there. So I don't know that I get in Anthropic on an IPO because I'm already so heavily into these two. I really don't know on the IPO front what I would really buy. And I also looked up SpaceX, right? And this is kind of getting away from what we were talking about, but I already had these kind of lined up to share with you guys. Do I really want to buy into SpaceX? No, not right away. I don't, right? I see this as a problem. The highly anticipated offering targeting a record-breaking valuation of 1.75 trillion to 2 trillion. So why do I not want to buy one of the hottest IPOs to start? Well, you got all these big investors, all the big seed round investors that are going to be cashing out after this thing goes just parabolic after it IPOs, right? So then when the lockup period does expire and those investors can get out, they can cash out. They started investing this thing when it was worth maybe a couple billion. Well, they're going to start selling out because they've made 100x, right? They've already made that money back. So I think that they're going to start cashing out like they tend to after that lockup, and then the stock price is going to tumble. And I think if I'm going to buy it, it will be after that lockup expiration. I do not want to buy it on day one because I do not want to be trading this thing. And I think that is going to be a trader's paradise because the volatility is going to be all over the place. And let's be real, I'm a long investor. I try to do some of the covered calls. I buy things when they're cheap and they could go up a good amount, right? Like I'm not looking at things right now that are fairly valued. Like I don't need to buy more AMD simply because my position's decent. I have less than what I had, but I was able to buy it this past week at 405 and 395. I posted that on the group, and that is what I was going to mention to you guys, is that I was buying back into AMD. So if I do look at the chart, if I look at the 5-day, I think it was this week. It might have been last week at this point. No, it was this week, right? So I had sold it at 450. I told you guys if it got down to, I think I put another limit order at 435, and then I did one at 415, but then I lowered it to 405, probably pre-market. So I ended up getting it at 405, and then I set another limit order down here at 395, and that did trigger. So I was able to buy here and down here, and then just watch it go up. Right now, could I have bought all $90,000 back? Yeah, I could have, and I would have been up significantly in that time. I could have taken that 90 and turned it into 100 in the course of 3 days. And the fact of the matter of perfectly timing this bottom, yeah, I had my limit order set, but at the same time, I don't really feel like gambling. It could have simply just gone down, right? It could have gone down to 3.25, and then my buy at 395 doesn't look that great. So I'm going to continually say dollar cost averaging is the best way to go. So I still have a limit order at 365 was my next leg down. And if it gets back down, I think I've raised it up now to 395 again because I'm comfortable with that as forming a base here. So I don't mind buying more at 395 the way it's behaving. But I don't know if that is going to be the bottom, right? It could run down to 3.25. It could go up to 575. I don't know. So I'm going to continually buying in small chunks that I feel comfortable buying back in. So that's that, right? I was getting into the stocks that I'm buying for the investing challenge, and I saw a squirrel, and I had to chase that one. But yeah, I mean, like AMD still is a high conviction name for me. I am still buying it. Yes, I probably made a mistake, but I'm making the best out of that situation, right? That's just how we're going to do it. You make a mistake, you kind of pivot and figure it out. Celsius, man, still love Celsius. I still think the Pepsi and Alani and all those deals and distribution and this, that, the other, I still really, really like Celsius. You got around 100%, 106% of upside. I really like this position. It's not tied to AI. It's not tied to technology. It doesn't give me a lot of those fears. They have a lot of catalysts in what's been going on over there. They have a lot of positive synergy from the things that they're doing, the benefits of having other companies be invested in them, them buying their own other smaller companies to get more brands under management. I think the process is really working well. So I really like the fact that I can get this thing on the cheap. It's traded lower. It was at $48 to start the year. It's at $30 now for really no reason. Even on the low end, you have 11 or 13% of upside. On the high end, you're looking at 182%. I do think it can get back into the $50 range without a problem. So for me, buying Celsius at $30 just seems to make so much sense. And it doesn't scare me in the least to buy this here. So I have been buying that. I really do like Microsoft. Amazon's probably run a little bit too much. So I don't know that I really want to chase that. I'm probably on a Celsius, NVIDIA. I still like NVIDIA. Salesforce, Adobe, SoFi, Nike, Netflix, right? Those are probably the 6 stocks. I think I just said Nike, yeah, we'll call it 6. I'm not going to count. I'll probably forget one. I do like all these names. I think Nike, SoFi, Celsius are going to be the three that are not tied to AI. I think Nike, with kind of an uncertain economy, gives you a little bit of fear. SoFi, man, I really, really like SoFi, and I really, really like Celsius here. I would probably have to flip a coin. The fact that Celsius has more upside from all these analysts is just kind of noise, to be honest. SoFi, I have a larger position, so I'm going to say I'm going to buy Celsius based on the fact that I can probably add more to that position based on my portfolio sizing currently. So that's what I'm going to do. I'm going to buy some more Celsius. Ticker is CELH. And I could probably also buy some Netflix. Maybe that one goes to next week. Maybe we look at Netflix for next week because my position size there is small. Yeah, I think that's what I'm going to do. I'm going to buy some more Celsius. I like the price here. It's kind of forming a real strong base around 30. We haven't really seen it drop too much below that, maybe down to mid 28s, but not too crazy. So I like Celsius. I think Netflix might give us a little bit more time to rebound. Celsius, man, I think we could just get a couple little things going better in the economy. I even think if just gas prices came down and people want to run back into Dash In or 7-Eleven or whoever and pick up another can of Celsius because they have a couple extra dollars when gas prices go down, I think that's more of a benefit for them as well. I think that's probably one of the things that's holding them back right now is people want to travel less. People are probably changing their habits slightly based on the price of gas and travel expense. And maybe they're bringing more drinks from home. I don't know that has staying power. I think people are going to find a way to purchase the things that they want to have regardless. So I'm going to go Celsius. Thank you guys very much for dropping by, stopping in, checking it out. Thanks for making the last video go so well. I don't know why I posted it to some other pages, but it is what it is, right? So thank you guys very much for stopping by. Please make sure you like, subscribe, and share. I definitely do appreciate it, and appreciate the support that you guys have given over the past, 4 years at this point of 4 or 5 years of this podcast. So thank you very much, and I'll catch you in the next one.